Welcome to Trading Lounge and the US tech stocks, and we'll look at the SP and the NASDAQ as usual. And we're looking for this move up here that counts as 5 waves. We're looking for wave 3 and 4 here, which I think can be completed at the moment. And then we'll look for wave 5 up here of wave 3, and then another wave 4, and then another wave 5 up here for 3. I may need to shorten this whole structure up here to get to this wave 5 of 1 up here, 5 or 1. So I may need to shorten this particular structure here. We'll see how we go. And the reason I would shorten it is that I need to bring it in line with obviously the markets that are creating this. So not only the tech stocks, but the banks are also that. We'll probably have a look at the banks again, maybe tomorrow or the next day. But as it stands, we're at 6,000 here, and obviously there's lots of zeros on that, so psychologically it'll have a little bit of pull there for a while, so we should expect further consolidation and swings across this area here, above and below that area. So if we're just tuned straight into the intraday on the 1,000 tick area here, this is obviously the 6,000 here, and we're getting our first, we've arrived here and we're getting our first correction across here, and it does appear that I can see the bones of this here in terms of 1, 2, 3, 4, 5. So we'll be able to put that. There should be some sort of correction on this perhaps in the Asian session, and then wave 3 just as a thing normally comes across the top of the previous structure, and then we'll see a move up here. Now how high that goes, I don't know. It's always best just to count the 5 waves within this last structure here, but once that's done, then we should be seeing another wave 4 here. Now because we've got group 1 here and group 2 here, that will be the initial swing range, and you can see that that's being applied quite nicely, and the market should continue building that case by having support over here and resistance over here for that. So do I have that up there? So that will be there at that point, and we can look at this wave 3 here and wave 4 here, and so on, and then from that point we can move up again. So not fantastic trading, but okay for day traders if you can pick up bits and pieces of it. The third wave here may be okay. Otherwise we'll wait over here for for the next trade. Now so I mean, this could extend higher, I get it, but we'll just see how the cookie crumbles, because these big numbers like 6, with lots of zeros on them, whatever they are, do have a psychological sort of hold. So we should just sort of expect that, but that's the basic pattern at this point. And much the same for the NASDAQ as well, the 3, 4 here, and then going up for wave 5 here. And just going to so basically we're going from wave 4 here to wave 5 here, and this is what we're looking at in stocks. And once that's been done here, then we'll be looking for an ABC pattern coming back into play. Now how far that comes down, that's another story that we need to figure out. But the main thing here is that this pattern across the 20,000 here is a classic trading levels pattern. So just the normal pattern that you can see in terms of a 1 minute on a tick chart, or you can see it in years as well. So basically we've got the arrival at the 20,000 for the NASDAQ, we've got the arrival, we've got the reaction, and then we've got 5 waves coming up into here. How high that goes, that's what we're looking at the moment. And then we'll have that ABC that I mentioned. So this is the general pattern across that 5,000, across this. We've got the arrival here, the reaction, the first high above the level, and then some type of correction over here for this. So it's just what we need to work through. These are all 1s and 2s in here, so now we're entering the 4s and 5s. That's the other part of the pattern. So different psychology, a different pattern formations, and these wave 4s. At this stage it's quite simple, but can get quite complicated as well. So let's just go to the 1000 tick chart and build in from here. And so wave 3 with the A wave and ABC for the B wave and down for the C wave, and we can look at this here probably as wave 1 here. But you'll see wave 2, will come back, and if you're going to trade this long here, then you'll be looking for the B wave here. So looking to go long on top of, well, the B wave here, or you can look at a classic trading levels pattern. So from 21,000 to 22,000, which is up here, the levels are as follows: 1, 2, and 3 for group 1, and then the midpoint, and then so 1, 2, 3, 5, and 8, the Fibonacci numbers, and then we also look at group 2 there, which is the 65, the 650 in this case, and the 720 in there. 722 and a half is a bit more accurate, but that's fine too. Near enough is good enough, as we say in Australia. So these are the 21,000 is a minor level, and these are sub levels. And the between each one of these, the 1, 2, 3, 4, the 1, 2, 3, 5, and 8 will be the next degree down from those sub levels there, so micro levels. And yeah, so pretty simple sort of ABC pattern. Can I see anything sort of, could this double in size? It could double in size, I guess. I mean, we could look at this as being the A wave here, the B wave, and a C wave for the B wave, and then a C wave down, and bring the wave 4 over here. I'm just saying it's doable. That's the trouble with wave 4s, they can get a bit gnarly. So just need to be a bit careful about them. But I think basically looking at stocks, I think that would be looking at, it does feel that we're looking at this third wave here. And even so, this, even if this is an A wave here and a B wave here, and you're entering in here, you should be able to at least, if you're risking, if you've got an account over, 40, 50,000, well, then you can start getting down to 0.5% and 0.25% and those sort of things. But most folks that have got, short-term trading accounts, should really be sitting at sort of 30,000 minimum. But yeah, it's a bit tricky. I mean, you've got to be a good trader if you're going to have something like, an account of $5,000 or something like that. If you've got an account of 1,000 or 2,000 or 3,000, well, just look at it as education, and that's the cost of your education, because you're going to blow it up, because the numbers just don't. The numbers just won't work for you. Okay, so anyway, enough waffling. So that's that, and we come over to to Apple now. As I've always said with Apple here, it's a bit of a mess, really. So I don't know if this is the right count for it. So anyway, we're not trading it. It doesn't matter. We can see that it's like a sort of a wet brown paper bag. You know what I mean? It's soggy as hell, and it's not, showing any sort of strength to the upside or anything like that. So yeah, nothing really to see here. If we go in here a little bit further, yesterday we're looking at basically we've been looking for a move off the 220 here and it can pull back to this area here. Now this is all a little bit messy in here. We could put the B wave here, we could have this as the A wave in here, we could put a B wave in here and a C wave here. I just don't know at this point, so I'm just going to leave it. I don't have a clear pathway. If we've got a classic trading levels pattern on the 230 and we've got some impulse waves there, then I can surf that to the shore, but otherwise we're just going to leave this as is, and we'll just figure it out. It'll eventually, it'll move into a place where we go, okay, that's what it is. Okay, let's rock and roll on that. But at the moment, I can't give you a clear pathway for that. This is Amazon here on the weekly chart. This is also another classic trading levels pattern here, the arrival, the reaction, the first high above the level, and the ABC. So that's a general pattern that we're looking at here, and our job is to figure out how to count this to the upside. So in counting it to the upside, then I'm just really looking at what we're doing with with the S&P. So from this wave 4 here going up here with the S&P here, and the NASDAQ's much the same from this wave 4 here, trying to count 5 waves up here the best we can. Okay, so we've had, you know, earnings and elections and things are a little bit skewed here and there, and like I said, I can see some stocks where we should have this wave 3 sitting over here, so I could be one wave out of sync with all of this. It's not that while stocks are traveling that they need to all be exactly the same, but you know, they're like sort of sheep or cattle, you know, in a paddock. They'll sort of, you know, herd together basically, but you know, things wander off and go bump in the night and those sort of things. So we just keep sort of bringing it back in, and you know, but like I said, we're in a bullish market, you know, right from the turn here. It's just a matter of, you know, figuring it out. So that said, based on this, we'll just go to the daily chart here now that we're looking at that, you know, that we're looking at that classic trading levels pattern, and we've got to kind of figure it out. So the arrival up here, the reaction and the first high above the level, and then a correction here. So that's where we are. So trying to work this out up here is what it is at the moment. Now, with the S&P and the NASDAQ, we're also looking at this being a wave 3 and 4 in here, so that's also sort of doable. And I notice with different charting programs and after hours trading, you get spikes here and there, and you kind of, should I include them, shouldn't I include them? So I don't really have a you know, a total clean pathway for this particular market, but I was thinking that, you know, if I could just generally drag everything into this wave 3 here and this wave 3 up here as tops, once these these larger wave, because all of these are 1s and 2s, and now we're getting into 4s, 4 and 5, 4 and 5, 4 and 5, so we're getting into a different thing here now. So we should be able to identify one of these larger wave 4s, because when we're in this wave 4 here, you can be pretty much assured that most others, everything's going to be pretty much be dragged into this wave 4 psychologically, you know. So we'll get there with it. It's just a matter of time. So from the daily chart here, now that you got a bit of a gist of it, we'll just go into the to the intraday. And yesterday we're looking for this wave 4, the 38.2% retracement levels down here further. However, you know, looking at these wave 4s on the S&P and the NASDAQ, and that, they look like they're kind of finished and wanting to move up. Now, how high that goes here, you know, be a little bit mindful of that. The idea is, yeah, I mean, you can get, you know, Fibonacci extensions and all those sort of things, and sometimes it's accurate and, you know, it's quite mind-blowing, and other times it's so wrong that it's so frustrating. So I don't really worry about that too much. I just prefer to count the structure the best that I can coming up here. And there's always some, you know, you might not know all of the structure, but sometimes you just recognize things. You'll go, oh, that's a wave 3 or that's a wave 4, so I know where I am now. I was lost for a little while, but now I'm found, you know, that type of spiritual journey off to the fish and chip shop. So that's we should be pushing up there. Now, if I was going to trade this, I would want to be on that 10 here. You could get in earlier, but you have to leave your stop under here. But remember the 38.2% retracement levels down here. So this wave 4 could get uglier. And if it's going to fail, it's going to fail right here where you're going to get in. So to have a little classic trading level pattern here is not such a bad idea. This would be 1 and 2 here, and this would be another little 1 and 2. So it does appear that it's building to the upside. I'll just see what I've done. Oh, yeah, here I've done a little bit of work, not too bad. So yeah, a little bit sketchy on this one here, but we could probably plug this in here as 1 and 2 at this point, I reckon. And then we could also, look, just copy this here. We could probably view this as 1 and 2 here, and going up for a third wave here building, but you're going to go into the Asian session, so it's going to be a bit dodgy. But I mean, normally wave 3 here would be, not always, because it can also be, you know, you can get, if markets are strong, what I'm saying is that this wave 3 here normally comes in around the previous top here. But you can get cases when the market's strong that you'll get 5 waves up here, and this is wave 1 up here. You know, so these are the things that you got to kind of figure out as you go. But I'm always pretty conservative, so I like to start from the bottom and build up. And then if I need to extend it, then I'll extend it at that point. I just don't like to throw targets too high up and get everybody sort of thinking up there and then let people down, you know. So yeah, it's a bit of a parenthood journey on this sometimes. So kids, this is where we're starting. Okay, that's Amazon, and then we're going over to NVIDIA, and NVIDIA in the bigger picture, the same as everything else, but NVIDIA here, I might need to stretch this up a little bit further because this wave 3 is already here on NVIDIA. So over here, we're still looking at wave 3 on the S&P coming up here further. So the indices, you know, the futures market with these indices can move things along in you know, in the night, so to speak, and create extra patterns and things. So this one's a little bit sort of shorter, so I might need to extend this further up. But at the same time, I can say that this market is going nowhere because it's at the 150, the medium level here, and you know, it's going to end up with a little classic trading levels pattern here, or a larger one at this point. So it's not really tradable. You've got the earnings on the 20th, so you're going to see some, you know, spiking there in either direction. I just, because we're at a big number, you know, arriving there, you know, there's a lot to be, there's a whole sort of you know, psychological events that need to occur at this space. So I don't think it's the, you know, the best horse in the race at this point. So we're just going to put, oh, we can look at, sorry, I should have just gone straight into the, I shouldn't have done that. I should have looked into the problem a bit further. So we've got wave 4 here, and it's probably, I'm not sure if that was wave 1, but it looks like it, 1, 2, 3, 4, 5 up here for this third wave up here. How high that goes, I don't know. First of all, we always put in group 1, which is in this case 50, 51, 52 and 53, and then we get 55 after that. So yeah, you know, these 1, 2 and 3 here are going to act like you know, they're going to act like resistance glass ceilings there for that. And I could put this here too, you know, it's a nice ABC to here. So then 1, 2, 3, 4, 5. So I wouldn't go chasing it up here, put it this way. You might just get this here and that will be it, you know, if it's based on here. So yeah, it's going to be a little bit mindful of that. I mean, technically that's a lower one there. We should use it, but yeah, you can see that it's, yeah, anyway, this is not going along in front of a large number. You want to have a really good reason for it, and earnings may be that reason. Anyway, meta platforms. So over here on the daily chart here, so once again going from wave 4 up to wave 5 for 1 and 2 here, and looking at 1 and 2 and dragging it into wave 3 over here, and looking for 5 waves in this little move here. So we're just going to pick it up at this wave 4. Now, as I've mentioned before, it's possible, you know, logically you would put this in over here for this. I get that, do you know what I mean? But it's just not, it was just such a small little spike. It looks like it's traded there quite nicely, but on the intraday, it's pretty short-lived, that little spike there. I mean, it's just one spike here, but if you went into, you know, 100 ticks, if we can go over here for it, you know, it's just that, you can see that it's just, you know, for some reason it's jumped up here and then dropped back. So should we include it, you know, that type of thing? Yeah, I don't know. Anyway, to cut a long story short, from wave 4 here, we're looking at 1, 2, 3, 4, 5 up here for 1. And then possibly the B wave here and the C wave here, and then up at that point, because it does look a little bit impulsive down here. So just be a little bit careful about that. I think we actually had a long trade sitting in here somewhere, didn't we? Anyway, like I said, that this would be occurring here, so you'll need to leave your stop out of the way if that's the case. If we get the B wave over here and you're not in this market, then you can go long on the B wave over here. Or you can, if you've got a keen eye, get the first impulse wave up here. That will probably come quite close to first supply levels here, and then pull back here. And then you can move that down to there. Based on that 5 waves here, then the market will give you another 5 waves up there. So it gives you the chance to reduce your initial risk or exposure, refining things like that. So that's where Facebook is. And then we go to Netflix here, and So yeah, in this case here, I also really need to put wave 3 over here. So I'll really need to investigate this a little bit further because it's a little bit quick, but it has been moving along extremely well. So we've had this as wave 3 and 4 here. So I have to go back and check this here where really I should be having wave 3 up here. You know, that's what I'm sort of thinking. So I'll have to go back and do some work on that. We had a trade in here, and you may have some more in here. As we talked about, we took some money off the table here. I think we're getting a bit toppy here now. So there certainly could be further upside. So you can either do a trailing stop at this stage, so the next move that comes down and up, put it under that one there, or you can just take money off the top there. But a trailing stop loss is quite good. So anyway, I'll leave that with you. But 1, 2 here. I could extend this up here further as well. I could put this here as not that one, but this one here, and 2 here, and I could go 3 here and 4 here because the rest of the market's going to go up as well, and 5 here. So I could put wave 3 up here. I'll just copy this here just to give you an idea. I could put that up there as wave 3 and then have wave 4 here. So I could build it. I could put that top in there, or I could build it up a little bit further here. That's the thing of it. I kind of like building it a little bit further actually, based on what we're seeing with the rest of the markets. So that's why I'm choosing a trailing stop rather than a what's the name? And then also the stop here too. Don't worry about too much about the number. What the stop should be is that, because if the market's going to come down, it's going to bounce off here, and then it's going to come down, and then it's going to go back here. And so that's where you put that under that low there. And then if that low is breached under that particular number there, then you may as well be out at that point because it's going to be pulled down to the next number. But spiking down like that is just the norm. Like this here, wait for that spike and then put the stop in always. If you're there, if you're not there, then you'll need to make allowances for that. But then you get into the guessing game a little bit, and that's where the trading levels can help as well. Because when you're working around and say the 90 here, group 1 above and group 2 below will be your natural swing range. So you want to leave your stop under the group 2 at least. Those sorts of things. Okay, so we come over to Google. I won't go into the bigger picture, but basically we can see that we need to move up here a little bit higher on this. We talked about taking money off the table here, so I'm not really sure. I think we're talking 82, 83 here for that. You could probably lift it up a little bit higher. So tomorrow we should, it's not just, this is a bit like watching the paint dry here. I think that you'll be able to see it anyway. So you've got your first structure up here as 1 and 2, and we'll just see. Yeah, we've got time. I won't put a target in here just yet for this. We'll see how far we can stretch this up here. Yeah, with that wave 3 there, that's where we should have NVIDIA, I think. And then we've got Microsoft, which is in a completely different pattern. So I'm putting it in the Apple basket, where it's just I'm just not interested in it at the moment. So we're looking for an ABC yesterday down into this space, and then we're looking for a C wave up here, and then another move down here now, and then up from that point. If we get a proper classic trading level pattern on the 30, we'll look for some long trades at that point. But yeah, I'm not that interested in it at the moment. We're just looking at it. What's the daisy? Not this one. Just looking at it as some sort of A, B, and C wave over here at this point. So nothing. I'm just not interested in it at this point. And then we come over to Tesla, and with Tesla here, we're looking. We've been in this trend to the upside here with 1 and 2 and 3. We're looking for wave 4 here. We pulled in the top there yesterday. So we're looking for an ABC pattern in here. I haven't quite looked at that. There may be one more little low here, but I'm not quite sure. It doesn't really want to go after a little ABC here. It could come down to here. So if it finds support on this level here, then on that little nodule there, then you could go, if you had the first high above the level at that point, you could go long at that point if you wish. How far you get up here? Will you get to the 400, the medium level? Don't know, but group 2 here. There. But the thing here too is that we're going into, all of these have been 1s and 2s at this point. So from here, this where the trend changes, we're going into 4s and 5s at this point. 4 and 5, 4 and 5, 4 and 5, 4 and 5, 4 and 5. So it's a different thing, but we're looking for 5 waves up. I mean, if you went along here, that's fine. This wave 4 could pull back to the same wave 4 here, but normally I find that they sort of move up a little bit here. So yeah, look, it's okay to go long here if that's something that you're interested in. You know, I mean, Tesla is one of the most traded stocks for the young bloods. And all I can tell you is that this is, if we're talking young bloods, we can say buy the dip. So this will be buying the dip. And we come over to Bitcoin. And yeah, there's a couple of ways to count this to the upside. I won't go into them at the moment again, but we've been over them a lot. One of them is we've got this wave 4, another one is we've got this wave 4. In the meantime, it doesn't really matter because all we need to do is count 5 waves up here. Right? That's all we need to do. So it could be this one or it could be this one based on this, right? So it doesn't really matter. So if we just take it using this wave 1 here and counting 5 waves up, 1, 2, 3, 4, 5, that's what we can be doing. And once again, as I pointed out, that these are all 1s and 2s, and then we're getting into 4s and 5s now. So the psychology for all of this is basically changing around this point here. So if you took all of this trend here and flipped it over on its head over here, this is the type of pattern we're going to get over here. Just to shape it up a little bit. So at the moment, you can see we've got this 1 and 2, 1 and 2, 1 and 2, 1 and 2, and going up for 3 here, looking for 4 here, and then going up for 5 here, and then 4, and then 5 here. So we're at the 90 here, and this is the 100,000 up there. So we're just going to, like we did with the S&P, go from 1 day to 1,000. And let me just get some bearings here. So this blue wave 2 here, for example, we're looking at 1, 2, 3, 4, 5 for 1 and 2. So from blue 2 to blue 3 here, we're looking for 5 waves, okay? So this 5 waves over here. So from blue 2 to blue 3 here, we're looking at 1, 2, 3, 4, and 5 here for that. Then we've got this wave 4, and that opens up another situation. So yesterday we were at the top. We're at the top here yesterday, somewhere in here. Anyway, looking for this wave 3 top, and like the S&P and all the rest of it, just wanted to check on the bonds are down. Okay, so sorry, yeah, just making sure that the big bowl of jelly, financial jelly, is wobbling in the right direction. So yeah, so over here, wave 3, 4, and going up for 5 here. So we've probably got 1 and 2 and 1 and 2 here, or we could go 1, 2, 3, 4, 5 for 1 and 2 and 3, 4, 5. It doesn't really matter, but we'll end up pushing up here. So this will also be a classic trading levels pattern here, the arrival, the reaction, the first high above the level, then an ABC pattern here, and then we'll go up again at that point. So this is just doing everything that it should be doing at a large number. Yeah, and then we'll go up for this wave 5 here. Will it go up to the 100,000 on this wave 3 here? Don't know, but we'll get there at some point. So this is what we're looking at here. So still just going to bring these over here so I can use them later in this one. I'll just bring them in here so they stay there. So yeah, so there we go. So all the Bitcoiners will be very happy. I've got a bit of pocket money in it too, so it puts a smile on the dial. Okay, so that's it, folks. Thanks for tuning in. Cheers.